Hello friends, today I am going to show the valuation of Asian Paints. Asian Paints is a market leader in paint section and it's fundamentally a very good company. Doing valuation is most important before buying any company's shares. So Asian Paints ROC is 33.8% and ROE is 28.2%. It's a very good number. And coming to the pros of the company is almost debt free and company has a good return on equity. Just now I told it is ROE of 26.39 for the last 3 years. And the company is paying 43.4% of dividend. Again, it's a very good number. Coming to the cons, the stock is trading at 20.93 times to its book value. Because the company is very expensive and the share value is going up and up. The company has delivered a poor sales growth also. For the last 5 years, it is 8.22%. Now let us evaluate the company whether we can purchase at this time or not. I am going to show in 4 methods. The first method that is revenue growth method. For this we need exponential volume weighted average price and total number of shares. Then we can calculate market cap. These all calculations I have shown in my last previous videos. Then we have to calculate TTM revenue. For this we need total income from operations of last 4 quarters. The total TTM revenue we can get. Then we can calculate revenue multiple, that is market cap divided by TTM revenue. We will get the revenue multiple. See, this is market value and this is TTM. We will get 12.3, that is revenue multiple. Then we have to calculate revenue growth. For this we need 4 years data. This data we can get in annual report of the company. So revenue growth is 6.19% is the actual. I have considered 90% of revenue growth. Even the share price falls considering 90% of revenue. So I have estimated the revenue growth and estimated revenue, then estimated market capitalization and calculated the price of share. So average price per share is 2666.15 rupees in a revenue method. That is the final average value. Now I am going to show the valuation using EV by EBITDA method. For this we need the same data, XVWAP, total number of shares and market cap. Then I have calculated debt of the company. For this we need borrowings, that is current liabilities and non-current liabilities borrowings. Then other financial liabilities of current and non-current liabilities. So total debt is 1717 crores. Then I need CCE calculation, that is cash and cash equivalents. Then bank balance. So total CCE is 782 crores. Then net debt I have calculated, that is total debt minus CCE is net debt. See here, this is the total debt and CCE is subtracted from total debt. Then I calculated EV, that is enterprise value. To get EV we have to add market cap plus net debt. So we will get enterprise value. So this is the enterprise value. Then I calculated TTM EBITDA for last 4 quarters. So my total TTM EBITDA is 4680.4. Then EV by EBITDA multiple is 51.8. So this is the EV, enterprise value, and we have to divide this by TTM EBITDA. We will get EV by EBITDA multiple. Then I have calculated EBITDA growth, that is year on year. So I have taken 4 years data to calculate CAGR of EBITDA. Then I got 6.5% of EBITDA growth. Then I have considered 4 scenarios for actual growth and 80%, 70% and 60%. Then estimated growth and estimated EBITDA, then estimated EV and expected equity values are calculated. So final equity value per share is calculated in 4 scenarios. And average of all 4 scenarios is considered as my final price using EV by EBITDA method. Now I am going to show the PE method. For this we have to calculate TTM PAT for last 4 quarters. So I calculated the PAT for last 4 quarters, that is 2790.4. Then I calculated TTM PAT growth, that is year on year. So CAGR of TTM PAT is 11.69%. Then market cap and PE numbers we have calculated. Market cap is already calculated in the previous method and PE is calculated using a market cap whole divided by TTM PAT. We will get the PE multiple. So we have total number of shares also. Then I taken peers data to compare the company's growth compared to the peers or industry PE. So 5 peers I have considered, and price to book value and price to earnings is taken as average value. This we can consider as industry PE. Then in two approaches I have calculated the share price, that is inward approach and peer approach. So TTM PAT is calculated for inward and peers. I have taken 90% and 70% of actual PAT, so that I will be more conservative than aggressive. So then I calculated estimated PAT and expected market cap, then price per share, and finally gave the weightage for each scenario. Here I have given 0.3 weightage for inward approach and 0.35 for peer approach, because I got comparatively less price in peer approach. It is always good that the company is growing much better than its peers. So to balance the value in peer approach, I have given more weightage than the inward approach. So total weighted values are added to get the final price using PE method. So in this method I got 3,169.23 rupees. Now I am going to show the fourth method, that is book value method. Here also I need a market cap value x VWAP value, and now I got current book value from screeners.in, and then I calculated the price to book value using the formula weighted VWAP divided by book value. We will get the price to book multiple. So then industry price to book value we have calculated in the previous method, that is the peers book value is nothing but industry PB. So I have taken the data of 3 years book value and 5 years back book value. Then the growth is calculated. If I consider the 3 years growth and 5 years growth, it is 9.45 for 3 years and 11% for 5 years. Then I did inward and peer approach in this method also. Here also I have considered two scenarios, that is if the book value grows in the rate of 3 years or in the rate of 5 years, that is scenario A and scenario B. Then I calculated expected market price and weightage as given as 0.3 for inward and 0.6 for peers, because the value is much lesser than the inward approach. To balance this, I gave more weightage for peers approach. Then I added all these weighted values to get the final price. We need to add all 4 scenario values to get the final price when we give weightage. So 3,101 rupees per share using book value method. Now I have calculated the final price. So we have 4 values, that is in 4 methods, that is price to sales method and EV by EBITDA method and price to earnings method and price to book value method. So I considered all 4 values and given equal weightage of 25% for each method. Then I got the final price, that is the weighted value. Then I added all these 4 values to get the final price. So the final price is 2,895 rupees. So this is the expected share price by 1 year. Now the current market price is 2,412 rupees as on date 29 Jan 21. So my expected range will be, even if I consider 5% down, then the actual calculated value I have to get 2,750 to 2,895 rupees. That is, my expected returns is 14% to 20% even if I invest in this company. It's a very good return for 1 year. Friends, 14 to 15% is a very good return. The company which delivers this much of return is considered as a very good company. And Asian Paints is a fundamentally great company. You can definitely invest in this company. But before investing, do your own analysis and proceed. Let us see the 52 weeks high value in NSE website. See here, 52 weeks high value is 2,873.45 rupees. So this value was touched on January 11, 2021. So our calculation is also 2,895.41. So it is little bit higher than the actual 52 weeks high. Now the share price is corrected dramatically, and this is the right time to invest. That's all for today's video. and happy value investing. Please like, share and subscribe to my channel to get to know the different valuations of different companies. Thank you very much for watching. Jai Hind and bye bye.